So, good afternoon everyone. Our report is about note payable. So, our objectives are at the end of the reporting, you would be able to define a promissory note, to know the initial measurement of note payable, to understand the subsequent measurement of note payable at amortized cost, to understand the fair value option of measuring note payable, and to know the accounting for note payable issued solely for cash, interest-bearing note payable, and non-bearing note payable issued for property.
Promissory note. A promissory note is an unconditional promise in writing made by one person to another, signed by the maker, engaging to pay on demand or at a fixed or determinable future time a sum certain in money to order or to bear. Ito po isang katibayan na ikay magbabayad at future time at a fixed cost. Halimbawa ito ay sa exam nyo. Wala pa tayong pambayad sa exam, so gagawa po tayo ng promissory note na magpapatibay na tayo ay babayad sa ating nilagay na exact date at exact na amount na ating kailangang bayaran. Promissory note. PFRS 9 provides that a note payable not designated as fair value through profit or loss shall be measured initially at fair value minus transaction costs that are directly attributable to the issue of the note payable. In other words, transaction costs are included in the measurement of the note payable. However, if the note payable is irrevocably designated at fair value through profit or loss, transaction costs are expensed immediately. The fair value of the note payable is equal to the present value of the future cash payment to settle the note payable using market rate of interest. Subsequent measurement. PFRS 9 provides that after initial recognition, a note payable shall be measured at amortized cost using the effective interest method. Ito po yung ma-interest ang ating hiniram or ating note payable. At fair value through profit or loss, if the note payable is designated irrevocably as measured at fair value through profit or loss. Ito po ay pwedeng ma-void. Amortized cost of note payable. Amortized cost of note payable is the amount at which the note payable is measured initially. A minus principal repayment plus or minus the cumulative amortization using the effective interest method of any difference between the face amount and present value of the note payable. Actually, the difference between the face amount and present value is either discount or premium on the issue of the note payable. Magbabago lang po yun pag may may discount or may interest ang inyong note payable. Note issued solely for cash. When a note is issued solely for cash, the present value is equal to the cash proceeds. Illustration.
So, on November 1, 2020, an entity discounted its own note for 1 million at 12% for 1 year. So, meron tayong note payable na 1 million. And then, ilas natin yung discount na 120,000. So, 1 million times 12% is equals to 120,000. And then, ilas natin siya. Kuha natin yung net proceeds na 880,000. So, paano natin i-journal? So, i-debit natin yung cash na 880 and then yung discount on note payable na 120,000 and then i-credit natin yung note payable na 1 million. So, yung 120,000 is total interest expense na yon for whole year. So, thus on December 31, 2020, after 2 months, the discount on note payable is amortized as interest expense. So, ang interest expense is for 2 months is 20,000. Paano naging 20,000? So, 120,000, i-times mo siya sa 12 months for 1 year. Kasi merong 12 months in 1 year. Tapos, ang total nun is, each month, meron kang interest expense na 10,000. Tapos, kasi 2 months mo yung hinahanap, so 10 times 2 is equals to 20,000. So, pwede natin gamitin yung straight line method para maging for the simplicity. So, straight line method is used in amortizing the discount on note payable for simplicity. So, if a statement of financial position is prepared on December 31, 2020, the note payable is classified and reported as current liability. So, note payable na 1 million, ilas ang discount on note payable na 100 million. So, meron na lang tayong carrying amount na 900,000. So, ma-observe natin na yung discount is directly na siya na gideduct sa face amount sa note payable. So,
Interest-bearing note issued for property. When a property or non-cash asset is acquired by issuing a promissory note, which is interest-bearing, the property or asset is recorded at the purchase price. The purchase price is reasonably assumed to be the present value of the note and therefore the fair value of the property because the note issued is interest-bearing. So, pag may interest-bearing na po yung note payable is iiba po yung actual purchase price or yung value niya. Kasi dyan na po papasok yung interest-bearing note. Illustration.
So, on January 1, 2020, an entity acquired an equipment for 1 million payable in 5 annual equal installment every December 31 of each year. So, interest is 10% on the unpaid balance. So, let's journal the 2020. So, January 1, nag-acquire ka ng equipment worth 1 million. So, and then, nag-issue ka ng note payable worth 1 million then. On December 31 naman, meron kang interest expense na 100,000, a note payable na 200,000. So, yung 1 million, divide mo siya sa 5 annual installment para makuha mo yung note payable every year na 200,000. And then, i-credit mo yung cash worth 300,000. So, yan yung journal entry para sa first installment and interest for 2020. So, on 2021 naman, December 31, merong interest expense na 80,000. And then, note payable na 200. And then, i-credit natin yung cash worth 280,000. Kasi, yung cash yung ibabayad natin. So, papalabas tayo ng pera worth 280,000. So, that is for second installment and interest for 2021.
Non-interest bearing note issued for property.
So, when a non-interest bearing note is issued for property, the property is recorded at the cash price of the property. So, the cash price is assumed to be the present value of the note issued. The difference between the cash price and the face of the note issued represents the imputed interest. So, the imputed interest is based on the sound philosophy but that no lender would part away with his money or property interest-free. So, illustration. On January 1, 2020, an entity acquired an equipment with a cash price of 350,000 for 500,000, 100,000 down, and the balance payable in 4 equal annual installments. So, the journal entries for 2020 is, so, di ba, nag-acquire tayo ng equipment worth 350,000 for 500. So, yung equipment is, yung cash price niya is 350, i-debit natin, and then yung discount on note payable na 150. So, may discount tayo na 150 kasi nabili natin yung equipment sa halagang 350 na dapat ay 500. So, nagpalabas tayo ng cash na 100,000 which is yung down payment natin, and then yung note payable natin na lang na 400,000. So, on December 31, note payable is debited worth 100,000, and then i-credit natin yung cash na 100,000. This is for the payment of annual installment. Kasi nga, meron na lang tayong 400,000 at i-divide natin yun for annual installment. So, kaya nakuha natin yung 100,000 for note payable every year. So, again, on December 31 naman, yung interest expense na 60,000 and discount on note payable na 60,000. So, paano naging 60,000? So, 400,000 divide natin sa 1,000, 1 million, o i-times natin siya sa 150. So, malalaman natin to sa table. Ito yung table. So, table of amortization. So, to 2021, yung babayaran pa natin is 400,000. And on 2021 na lang is 300,000 na lang. So, next year, 200,000. And then, sa last year naman is 100,000. So, kung itotal natin siya is worth 1 million. So, 400 divide 1 million times 150 is equals to 60,000. And then, so on and so forth para makuha yung mga amortization for the next year. So, illustration.
No cash price. On January 1, 2020, an entity acquired an equipment 1 million payable in 5 equal annual installments on every December 31 of each year. Observe that there is no agreed interest and no cash price is available for the equipment. In such case, the cost of the equipment is equal to the present value of the 200,000 annual installments in 5 years at an appropriate rate of 10%. The present value of an ordinary annuity of 1 for 5 years at 10% is 3.7908. Therefore, the present value of 5 200,000 installment is 758,160, computed by multiplying 200,000 by the present value factor of 3.708. Journal entries for 2020.
So, on January 1, nag-acquire tayo ng equipment worth 1 million, di ba? So, pero meron siyang present value of ordinary annuity na 3.7908. So, times natin siya. So, meron tayong 758,160. And then, meron tayong discount on note payable na 241,840. And then, i-credit natin yung note payable na 1 million. And then, on December 31, 2020, meron tayong note payable na 200. And then, i-credit natin yung cash na 200 din kasi magbabayad din tayo. And then, meron tayong interest expense na 75,816. Kasi yung cost na lang ng equipment is 758,160 times 10%. Kaya nakuha yung 75,816 and then credit natin yung discount on note payable. So, ito yung table of amortization. Yung present value na 758,160 times 10 para makuha yung 75,816. So, itong payment, so, fix na ito na 200 kasi yung 1 million, i-times mo siya sa 5 equal installment. So, every year, meron kang babayan na 200,000. And then, yung 200 or less, i-deduct mo yung interest na 75,816 para makuha yung principal na 124,184. And then, yung present value, i-less mo yung principal para makuha mo yung next na present value, na which is 633,986. At yun yung gagawin mo for sa iba pa na year para hanggang mabayaran mo na yung note payable.
Non-interest bearing note payable lump sum. On January 1, 2020, an entity acquired an equipment for 1 million. The entity paid 100,000 down and signed an interest bearing note for the balance which is due after 3 years in January 1, 2023. There was no established cash price for the equipment. The prevailing interest rate for this type of note is 10%. The 10% value of 1 for 3 periods is 0.7513. Computation.
So, yung down payment na 100,000 and then yung present value of note. So, paano to? Diba 1 million? Ilas mo yung down payment na 100,000 para maging 900 na lang siya. And then, i-times mo siya sa present value of 1 for 3 periods na 0.7513 para makuha yung 676,170. And then, i-add mo silang dalawa para makuha mo yung cost of equipment mo na worth 776,170. So, paano naman makuha yung imputed interest? So, future value of note na 900, less mo yung present value of note na 676,170 para makuha mo yung imputed interest mo na 223,830. So, journal na natin siya. So, itong journal na to is pag-purchase mo ng equipment on January 1, 2020. So, pag-purchase mo, i-debit mo yung equipment na worth 776,170, which is the cost of equipment. And then, i-credit mo yung discount on note payable. So, ito yung imputed interest na 223,830. And then, i-credit mo yung cash, which is the down payment na 100,000 at yung note payable mo pa na 900,000. So, ito naman, i-record mo yung interest expense for 2020. So, di ba, meron tayong present value of note na 676,170. I-times mo siya sa 10% para makuha mo yung interest expense na 67,617. And then, ito, next journal is the full payment of note on January 1, 2023. So, record mo na siya kasi nakabayad na ng full payment na. Kasi, note payable, 900, and then, labas yung cash na 900,000 kasi nagbayad ka na nga. So, this is the table of amortization. So, yung present value na 676,170, and then, yung discount on note payable na 223,830, i-times mo yung present value sa 10% para makuha yung interest expense for December 31, 2020, and then, yung discounted on note payable, ilas mo siya sa interest expense for December 31, 2020 para makuha yung discounted on note payable na 156,213. And then, yung present value na 676,170, ilas mo yung, wait lang, 676,000, wait po, dali lang. 676,170. So, yung present value, add mo yung interest expense para makuha mo yung next na present value, and so on and so forth hanggang mabayaran na yung 900,000. So, fair value option of measuring a note payable.
PFRS 9, paragraph 4.2.2 provides that at initial recognition, a note payable may be irrevocably designated as at fair value through profit or loss. PFRS 9, paragraph 5.7.7 provides that the gain or loss in financial liability designated at fair value through profit or loss shall be accounted for as follows. Change in fair value attributable to the credit risk is recognized in other comprehensive income. Remaining amount of the charge in the fair value is recognized in profit or loss. Application guidance provides that amount recognized in other comprehensive income resulting from change in fair value attributable to credit risk shall not subsequently transfer to profit or loss. Cumulative gain or loss recognized may be transferred within equity or retained earnings. Transaction cost is recognized as outright expense. No amortization of discount and premium on note payable. Interest expense is recognized using the nominal and stated interest rate. Illustration. On January 1, 2020, an entity borrowed from a bank 4 pesos, 4 million pesos on a 12% 5 years interest bearing note. The entity received 4 million, which is the fair value of the note on January 1, 2020. Transaction cost of 100,000 was paid by the entity. The entity has elected irrevocably the fair value option for measuring the note payable. The change in fair value comprised 50,000 attributable to credit risk and 450,000 attributable to interest risk. Journal entries.
So, on January 1, 2020, meron tayong i-borrow na 4 million sa bank. So, i-debit natin siya ng cash 4 million and then nagpalabas tayo ng note payable worth 4 million din. And then, meron tayong transaction cost na 1 million. And then, i-credit natin yung cash kasi nagpalabas tayo ng 100,000. So, on December 31 naman, meron tayong interest expense na 480,000. So, paano nakuha yung 480,000? So, 4 million times 12%. And then, i-credit natin yung cash worth 480,000 then. And then, for the December 31 again, 2020, meron tayong note payable na 500, which is composed of gain from exchange in fair value and gain from credit risk. So, i-credit natin itong dalawang to. So, 450 plus 50 is equals 500,000. So, ito naman, carrying amount. Diba, yung giborrow is 4 million. And then, meron tayong face value niya nung note payable na 350,000 on December 31, 2020. Kaya, gilas natin siya, tapos para makuha natin yung decrease in fair value of liability gain na 500,000. So, natapos na yung aming report and I hope na may na-learn kayo. Pero bago natin i-end ito, meron tayong problem na sasagutan. Wait lang. Ito na po.
Problem 1. On July 1, 2030, Pearl Company borrowed 1 peso, 1 million rather, on a 10% 5 years note payable. On December 31, 2030, the fair value of the note is determined to be 975,000 based on market and interest factor. The entity has elected the fair value option for reporting the financial liability. Find the following. So first,
ang hanapin natin is yung reported interest expense for 2030. So, wait lang. So, meron tayong giborrow na 1 million. Times natin siya sa 10% is equals to 100,000. Tapos, i-times din natin siya sa 6/12 kasi July hanggang December lang. So, 6/12 is equals to 50,000 na lang yung ating interest expense for excuse interest expense for 2019. So, 50,000 na lang. And then, next question is, what is the carrying amount of note payable in December 31, 2030? So, the carrying amount is equal to fair value, di ba? So, yung sabi dito sa problem is the fair value of note is determined to be 975,000. So, yun na yun, ang ating carrying amount o note payable is 975,000. And then, ano naman, for the third question, what should be reported as gain or loss in 2030 as a result of the fair value option? So, the note payable na 1 million, and then yung fair value na 975,000, ilas mo lang para makuha mo yung decrease in fair value of note payable gain, which is amounted 25,000. So, if the fair value option is elected for reporting a financial liability, the liability is reported at fair value of every year end, which result changes in fair value included in profit or losses. So, that's it. So, ito siya kung paano siya nakuha. Yan yung solving. So, let's proceed to the second question or second problem. So, Lube Company had the following loans at 12%. Interest payable at maturity. So, the entity repair each loan of schedule maturity date. So, ito yung table nila. So, the entity recorded the interest expense when the loan are repaid. As a result, interest expense of 150,000 was recorded in 2019. So, find the following. What amount should be reported as interest expense for 2019? So, kakasabi lang, as a result, the interest expense of 150 was recorded on 2019. So, ito na yung isasagot natin sa question number 1. Yung sa pinakailalim kanina ng illustration. So, 150 yung interest expense natin for 2019. So, second question is, if no correction is made by what amount should be reported as interest expense for 2019 be understated. So, on January 1, diba, yung sa table. So, ito na lang, ipapakita ko na lang para maintindihan nyo talaga. Kasi, pag sabihin ko lang, mahirapan kayo, So, ito. So, on January 1, 2018, amount na 500,000. Magmamature siya ng October 31, 2019. So, yung 500 times natin siya sa 12% times 10 over 12. So, 10 over 12 kasi ay January hanggang October. So, that is 10 months. So, 10 months, divide mo siya sa 12 months. So, meron tayong 50,000. And then, next is February 1 hanggang October 31, 2019. May amount tayo na 150,000, i-times natin siya sa 12% ng interest payable at maturity. And then, i-times natin siya sa 6 months over 12. So, this February 1 hanggang hanggang July 31. So, 6 months. So, meron tayong 90,000. And then, no May 1 hanggang December 31, 2019, meron tayong 240,000 which is the amount na 300 million times natin sa 12% times 8 over 12 is equals 240,000. So, meron tayong total na interest expense for 2019 na 280,000. Less natin yung recorded interest expense in 2019 which is yung sinagot natin sa question number 1 na 150. So, ilas natin siya. Meron na lang tayo understatement of interest expense for 230,000. So, that's it. Yan lang po. Sana may naintindihan kayo. So, thank you for listening. Thank you.
Thank you.